Let's talk very briefly about Woolworths. And why briefly? Because we talk about the stock all the time. We spoke about it less than a week ago when we were discussing the apparel division with Sid Vianello here in studio. And the reason, of course, is because Woolies is both. And in fact, probably has more clothing in the Australian business than it does food. And here in South Africa, it's probably roughly equal, I would guess. But of course, in the food environment, it's the sort of premier provider to rich people. Market capitalization, 94 billion rand. Hasn't had the best couple of months of trading. Was it 100 plus? We'll see the chart in a minute. Price to earnings ratio, very similar to Shoprite, 20.95. Dividend yield, 3.15. Anything to add about Woolies? I mean, clothing, it is what it is. Food, you can't fault them on the food. Personally, if I've got to buy food, which is, I admit, not all the time, I would only ever want to go to a Woolies.
Yes, I think they've perfected their product mix, invested quite considerably in the quality of their products. So food makes up about 20% of their overall market cap.
Yeah.
And there's, of course, speculation that they could take this food offering to Australia, which I think will really benefit the group.
Because they started doing a few experiments inside the David Jones stores, bringing back the deli and so on and so forth. Yeah.
So I think that's one to keep your eye on. But I think they've perfected the product mix, and it's definitely a good stock to hold.
And store rollouts, they've done the sort of premier store in the large cap malls. They've also got the smaller stores. They've got quite a lot of mini stores in the petrol station type environment. They've got solid distribution capability. And as you say, they've invested a lot in the idea anyway that their stuff is a premium product that has the cold chain taken care of and so on and so forth.
It's a great marketing success story, and very, very specific. I mean, they've grown their convenience offering quite substantially, and as we know, in the convenience offering, you get higher margins.
Because then you got to cut up the pineapple for the customer. I mean,
there
come on.
And we're finding them at all the engine outlets, so definitely hard to miss one, Paul.
You like the stock too?
I do.
Because chart-wise, you can see there it goes to 101, 102, and then the tail end of 2015, it sort of drifts down to 80. But basically recently back up towards 90. But of course, it's all about earnings. So I guess we'll have to wait and see how it all comes together. There's the Aussie currency issues as well. But you're hot on this one.
Definitely hot.
Yeah, I'm hot too.